Less than 1 month after it ended, Tesla has officially released its quarterly earnings report for the first quarter of 2019. Following the release of those quarterly earnings, it held its usual earnings call at which analysts got to ask questions of Elon Musk and 5 other members of Tesla's executive team. I'm sure you've already heard some of the headlines from these financials. Tesla lost $702 million in the quarter, ending its 2-quarter profit run, saw a drop in cash on hand and suffered a drop in sales. Its figures were a lot lower than Wall Street had expected too, which had predicted a loss of $1.21 per share versus the reality of $4.10 loss per share. But what else did we learn from the call? Stick around and I'll tell you. Before I do, however, I should note that the day before the quarterly earnings were released, Tesla detailed an updated motor for both the Model S and Model X, along with some other updates. When paired with some improvements to wheel bearings, battery management, and handling tweaks, Tesla now says its Model S long range can travel 10% further than it used to on the same battery capacity. This extends Model S long range's total distance per charge to 370 miles, while the Model X long range now manages 325 miles per charge. Some other tweaks include the ability to charge at up to 200 kilowatts from a third-generation Tesla supercharger, as well as improved regenerative braking and acceleration. Combined with a price drop on some Model S and Model X variants, the news came one day after Tesla's first Investor Day, a day in which Tesla detailed its vision for autonomous robotaxis in just 1 year, pending regulatory approval. Why mention all these? Well, the announcements, including the updates to new Teslas, are good news ahead of the quarterly report, which was less rosy. And as a note, all quoted figures are in US dollars. Unlike the last 2 quarters where Tesla turned a modest profit, Tesla's first quarter was a different matter, with a 41% drop in automotive revenue from $6.3 billion to $3.7 billion. Because of some convertible bonds that reached maturity in the quarter, Tesla also had a bill of $920 to pay that certainly helped contribute to the drop in cash on hand from $3.69 billion in the previous quarter to $2.2 billion in the last. Why the drop in sales? Well, that's simple. At the start of 2019, US federal tax incentives for Teslas dropped from $7,500 to $3,750 as Tesla had reached the 200,000th vehicle per manufacturer trigger set out in federal tax law. In order to ensure as many of its customers got the full federal tax incentives as possible, Tesla made a massive push at the end of last year to deliver and sell as many cars as it could. This inflated Tesla's sales figures for Q4 and naturally resulted in a drop in the first quarter of this year. Q1 also saw some fairly regular price changes, including a drop in prices to accommodate the effective drop in federal tax incentives for US customers, meaning Tesla not only sold less cars but also earned less money, something that reflected in a drop in gross automotive margin from 24.3% in Q4 last year to 20.2% in Q1 this. Deliveries were also lower than in previous quarters, partly because of delays in deliveries in China and Europe, caused not by Tesla necessarily, but by red tape in China and industrial action at docks in Europe. This is causing something of a perfect storm, which combined with a drop in Tesla energy and battery storage products means the company's free cash flow has swung from more than $900 million in Q4 last year to negative $920 million in Q1 this. Post-Christmas slumps and lower sales due to weather are fairly normal in the automotive world, however, and Tesla's delivery problems in Europe and China now do seem to have solved themselves. In the earnings call after the release of its financials, Elon Musk acknowledged that Tesla's cash flow isn't great, but said that instead of raising more money through another debt or equity sale, he'd rather focus on making Tesla more efficient. Quote, "I think it's healthy to be on a Spartan diet for a while," he said. Alongside the financials, Musk confirmed during the earnings call that while Tesla has received very few Model 3 standard range orders, it will continue to offer it as an off-menu item. Personally, as a side, this is interesting because one of the owners of the companies that we share a building with here in Portland just purchased a software-locked standard range Model 3, and I know at least 2 other people who've done the same thing. Anyway, in terms of manufacturing future models, Musk said that Tesla still hasn't decided if the Model Y will be made in Fremont at Tesla's existing vehicle production facility or at Tesla's Gigafactory 1 facility in Nevada. Regardless, Musk would not answer questions on the total number of Model Y reservations Tesla has got to date. Model Y was revealed during Q1, and it's worth noting that customer deposits were down in Q1 compared to previous quarters, although what I said about the time of year and car purchases should provide much needed context to these figures. One interesting point of note from the earnings call was the confirmation from Musk that Tesla intends to start its own insurance program next month. This will not only mean that you'll be able to finance your car through Tesla, but also insure it too, keeping your entire ownership experience under one roof. In order to keep premiums low and undercut the trend of rising insurance premiums for Tesla customers from third-party insurers, Tesla will use telematics data from customers' cars to figure out how dangerously or safely every customer is driving. Knowing how far or fast people regularly drive will allow Tesla to adjust premiums to suit each individual customer. Of course, this does open a whole slew of questions about privacy, but I think that's best for a future video. The final thing I'd like to note is the news that Tesla will be delaying the launch of its Semi to next year. Originally, Tesla had promised we'd seen production start this year, but this is the first time Tesla has confirmed there's going to be a pushback. While this isn't exactly a surprise to anyone who's followed Tesla production promises in the past, pushbacks are common. It doesn't bode well for Tesla's financials for the rest of this year. It also leads me to suggest, as I've done in the past, that Tesla's robotaxi service won't go live when Tesla suggests it will. So that's it. That's Tesla's quarterly earnings report in a nutshell. It's great to see Tesla launch revised motors for its S and X to improve range and performance, as well as reintroduce the standard range Model S, something I forgot to mention earlier in this video. But those financials? Well, Tesla has dug itself out of worse before, so I guess we have to hope it can do so again. That's it. Thanks for watching. Let us know if you liked it or didn't like it below. Scribble a comment, hit the notification bell so you don't miss out on a single episode. And if you'd like to join our special Patreon Discord group, you can find out how to join Patreon below. Also, in honour of Earth Day earlier this week, we're still offering 10% off all swag in our swag shop. Head to the Teespring store below and enter Earth Day in the checkout for 10% off. Buy some swag, support the show, and help us continue to make great content. I'll be back soon with another episode, but until then, keep evolving.